So let's do an example. You've decided, you've got all your people in place to help you make this investment, and you've been presented with a deal. So you're a permitted investor, meaning you have greater than $5 million worth of net worth, and you want to make an investment of $200,000 in a mortgage. Now you have your choice. Are you going to go syndicated? Or are you going to go into a fund? But let's just say it's a syndicated deal. So the syndicated loan is a land loan. You need to now look at the specific underwriting that's been provided to you, and it's your decision on whether or not this is good enough. So this means you could do your own underwriting on top of it. You can't necessarily say that the broker has given me this and I'm relying on the broker, and because they say it's good, that makes it a good investment. That's just not how it works in a syndicated investment. You, as the permitted client, which means you can invest any amount that you want, have to make the decision. In fact, I would say this is true for anyone, permitted or not, in a syndicated investment. It's your decision. You have to decide on the criteria and the underwriting that you want. Now, obviously, a good mortgage broker or a good shop will provide you with a good amount of underwriting, hopefully enough for you to make your own decision. That's really what you should be looking for. That's how you would make a syndicated loan decision. And we've talked in other videos about how you look at each asset. You have to gain that knowledge as a syndicated investor if you want to do this well. Do your homework, make wise investments, make sure you work with people you trust. We have another example on the other end of the spectrum of investors. Let's say you're a non-qualified investor. Let's say you make $125,000 a year and you have a modest savings of, call it $150,000 in your RSP, and you want to put some of your money into a mortgage investment. First of all, I would suggest that you would be working with someone who can put you into a mortgage fund. That would usually be an investment advisor. And let's say we have this land deal that we see, and it's within a mortgage fund, and we get these guys invest in land. That's great. You want to do this. So the investment advisor should be directing you to funds that have an offering memorandum, so that you can qualify by reading the offering memorandum of that fund and their investment policies. That investment advisor should be doing a KYC on you, and you should be proceeding that way. If you're in a situation where that's not happening, maybe you should be questioning why and find out, because there is a real risk of loss in any investment, and you should understand those risks before you get into it. Notwithstanding, if you've done that and you qualify to invest in a mortgage fund such as Real Alt, you can then, hopefully you're going to be seeing returns of 10%. And let's say you invest through your RSP and you do it through DRIP, which is a dividend reinvestment program, which is quite good, because then you're just compounding on your returns. And at 10% over 7 years, you would have doubled your money. So I think that's a great goal, and I think it would form a great part of anyone's investment, so long as you've taken the time to do your research and understand who you're working with, and that they've qualified you. I hope that answers all your questions. Please subscribe to our channel.